All right, so this is Alvarez Corp. We've done the worksheet, and now we're going to do the actual statement of cash flows. The worksheet does not substitute for the statement of cash flows, and on exams, this is what we're looking for, is the statement of cash flows. So here's the bottom part of the worksheet, the statement of cash flows flow effects, and this gives you all the information you need to do a properly formatted statement of cash flows. So you're going to have the company name, statement of cash flows for the year ended December 31st, whatever year. So it's going to start with cash flows from operating activities, and so that's what we would say, cash flows from operating activities. So that'll be our first major section. And as with the worksheet, we're going to start off with the net income. So we're going to go net income here. And that's going to be kind of out to the side, maybe over here. And that's 93,000. And you see we have this information right here. This will be the sort of the first item. So there's 93,000. And then you have to have this little phrase in here. You've got to have adjustments, because these are all the adjustments here. So we have to tell about that. We have to say adjustments. And what are those adjustments doing? They're adjustments to reconcile net income to cash provided by, or you always have to say used by, because you don't know which it'll be, operating activities. Okay, and this is where we just make, we have all the information already, we just have to plug it in. So we're not going to use arrows in a proper statement. You have to say, okay, so we had, what are these adjustments? We had an increase in accounts receivable. And that was, and if it is in the credit column, it's going to be an adjustment down. If it's in the debit column, it's going to be an adjustment up. So we have to make sure that we are showing that this is an adjustment down of 9,000 because we had the increase in accounts receivable. We had a decrease in inventory. And when we do that, we can see this is in the debit column, so that's going to be an adjustment up. Okay? We had a decrease in accounts payable. And maybe just to save a little time, I'll go accounts payable. You really should write it out, and especially if you're working for someone, you write it out. Okay? Decrease in accounts payable, it's in the credit column, so that's going to be an adjustment down. And then depreciation expense, simply go like this. And that's in the debit column, so that's going to be an adjustment up. And if you think about it, no cash went out to pay depreciation. That was from a prior transaction. Okay, so now we've covered everything in this operating section. We're going to total it. And then that total we've already got right here. At least the way I do things, the total adjustments are 36,000. And so now we come down to cash, and since it's a positive number we're going to get, we can just go cash provided by operating activities. And we do the 93 plus the 36, we've already got our total of 129. Okay, so the next section of our cash flow statement is we've got our cash flows from investing activities. So we write out what we're doing there. And then we look and see what happened. We sold land, we bought equipment. So we just tell them about it. And there's no adjustments here. These are where we're just telling what happened. We sold land and we purchased equipment. And we got all our numbers all ready to go. So sold land is in the debit column. That's gonna be a positive addition here to the cash. Purchased equipment, credit column, that's gonna go in parentheses as a negative. There we go. And so then, we total those up, and I've done that here. We used, whoops, put that down a little bit. We used 45,000 for investing activity. So then we would say just that, cash used by investing activities. There's nothing too, mysterious about accounting. This is what happened, and you just say what happened, okay? So cash used by investing activities. And then we come down to our financing section, and we did 3 things there. So here we've got cash flows from financing activities. Okay, so what did we do? We paid dividends, and usually you'd say you paid cash dividends, just to be complete. We redeemed some bonds payable, so we tell them all about that, and I'm going to abbreviate that. We issued some common stock. I don't know if you can hear the windows rattling, but I'm doing this where we're kind of in the middle of a lot of wind, and I can't do much about the window. Okay, so we paid cash dividends. We've got the numbers here. This is in the credit column, so that's going to be a deduction. Makes sense because cash went out. We redeemed bonds. That means that we had to buy them back off the market, so cash went out on that. That's also in the credit column, and cash went out to do that, so that makes sense. And we issued stock. We get money. So 42,000 came in. So now we have cash, well, let's do, it comes out to a total of negative 43,000. Okay, and so we have cash used by financing activities. And once again, the board isn't quite big enough for what I need to do, so we'll just have to wing it. So now we would get down to the bottom of this, and so we've got our cash flows from operating activities, financing, investing activities, and financing. We would add all those up, and we would get the change in cash of $41,000. Okay, then what you can't see here, because I'm out of board, is that we would then go cash beginning of the period, and where do we get that? We'd go back to the comparative balance sheets on the worksheet at the top part of the worksheet, and we'd see we started with 22,000 in cash. You add that to the 41,000 change, and you should get the cash at the end of the period of 63,000. Fortunately, in this problem, we don't have non-cash investing and financing activities, so we only ran out of room for one thing. All right, so that's how we get from the statement of cash flows effect part of the worksheet to the actual statement of cash flows.